With more than 6,000 small and micro-cap companies listed, if you're looking for the next Apple at the earliest stage, then ChannelChek truly is the orchard. The listed companies support ChannelChek, so it's free for you, the potential investor, to gain access to institutional quality research from FINRA licensed analysts, advanced market data, industry reports, news, and a growing catalog of videos and webcasts. Make sure to subscribe to our YouTube channel and register for ChannelChek so you're always up to date on what's going on at the small and microcap data place. Welcome to the Virtual Roadshow series presented by ChannelChek. This Fireside Chat features Chris Young, CFO of Entravision Communication, NYSE ticker symbol EVC. Joining Chris is Michael Kupinski, Senior Research Analyst for Noble Capital Markets, a FINRA-licensed SEC-registered broker-dealer. You can find Noble's research on Entravision on channelchek.com or by clicking the link in the description. With that, I am pleased to present Chris Young and Michael Kupinski.
Let's get started. Well, if you followed Entravision up to about 2 years ago and then went into a COVID isolation, you would not even recognize the company. You know, a series of acquisitions have transformed the company into a digital media centric company and has now over 70% of its revenues coming from digital media. And this has been a dramatic shift and it has significantly changed the growth profile of the company. So we're going to spend a lot of time talking about their digital media businesses and their strategy. And so let's talk about that digital transition. Chris, first, you had some legacy digital businesses and had a rough start on your digital journey. And I recall some investors were calling you at one point to sell them and get out. And can you talk about your experience with the early days of your digital transformation, what went wrong, and how owning the likes of Polpo, for instance, positioned you for the opportunities you have today?
Well, like any company, we have been, climbing a learning curve over time, and we knew years ago that digital was going to be the future. And you know what? In fits and starts, we started to figure things out. It took a while. Again, the learning curve is a steep one, and the first couple of moves, I think, were learning experiences. The first acquisition, I believe it was back in 2015, was Polpo, as you referred to. Polpo is an ad network. It was a good business platform at the time, but you know the essence of an ad network now has the internet's moved on, and that's kind of like Internet 1.0, that ad network business platform, and we've moved with it. But you know, you have to take your lumps and learn through the process. Transforming from primarily a broadcasting operation to a digital operation is it's a tricky process, and like I said, it's a learning process. It's been an education, but I think we're all better for the experiences that we've had.
And you focused initially on the Hispanic community and then kind of broadened out and added other types of businesses, including programmatic business like Smadix. Can you talk a little bit about Smadix and then how that has fit into your Polpo acquisition? And we'll get into the more recent acquisitions, but how this is all bunched together. Where does the actual business reside now? Is it based in the U.S. or do you have it under an umbrella in Spain, for instance?
Sure. So Smadix is a programmatic demand-side platform targeting mobile consumers. It's actually an operation that's based in Barcelona, and it is a homegrown product that we own the platform. We are constantly developing it. And what we're doing with that is now not just marketing it throughout Latin America and Europe, but also here in the United States. The DSP has proven to be very effective in the gaming industry, and gaming industry is in our backyard here at corporate in Los Angeles. So we've got sales staff here working, the marketplace and marketing the Smadix product, and that's worked out really well. Operationally, the way our digital kind of platform is structured, you've got two operational hubs. One's in Barcelona, one's in Buenos Aires, and then our financial hub is all in Montevideo, Uruguay. And then Juan Saldivar, who runs the platform is based primarily here in Los Angeles.
And people talk about programmatic, and what does Smadix actually include in their programmatic business? Is it all-encompassing? Is it TV, radio spots, digital? I mean, what exactly what do you define as programmatic?
Maddox is focused on mobile consumers, so they're getting ads in front of folks who are staring at their phones. Very little in other media at this point, but they're focused on the mobile consumers throughout Latin America, Spain, and now here in the U.S. And it's a performance-oriented product where, they are tasked with finding consumers who could convert to signing up to a product, whether it's a game within the Zynga universe or any other type of product. But they're focused on mobile consumers.
Gotcha. And so Smadix got its start pretty much in Latin America, is that right? And then you're trying to broaden it out into the United States. So how early on into that entrance into the United States are you, and how should we gauge that growth opportunity for Smadix?
It's a very early stages. When we acquired Smadix back in, I want to say that was 2016/2017, it was doing approximately $3 million in revenue. It will do approximately $30 million of revenue, give or take, this year. It has been a high growth product, and we still think it's the early stages for that product. There's going to be some investment required to continue to grow it, but our internal ambition here is to get it to a $100 million revenue line item within the next couple of years, and we think that's feasible.
That would be great. So I'm going to turn the attention next over to the company. It's in terms of your most recent acquisition of Cisneros, and obviously a marketing services company focused on Latin America, and there's a specialty niche here that it represents Facebook, and for those that are online that may not be familiar with Cisneros and your acquisition, can you talk a little bit about the service that Cisneros provides, and then we'll get into a little bit more of the details.
Sure. So Cisneros is an acquisition that we did back in October of last year, and they are very simply a sales rep firm for large global digital platforms, the likes of Facebook, Spotify, LinkedIn. And what they basically do is they market these platforms in what I'll call hard to reach places around the globe. You're talking about, Ecuador, you're talking about various countries throughout Latin America, you're talking about Puerto Rico, US territory, but still, when Facebook and these other platforms, they do their cost benefit analysis, they conclude that it's probably better and more cost effective to hire third-party companies to do the marketing for them in these countries rather than have people on the ground doing it themselves. And that's exactly what Cisneros does. They are trained, the Cisneros folks are trained by Facebook to execute campaigns on the platform. What they do in turn is turn around, go back to their regions, and they train their agency clients in their territories to do the same. And what they also do is guarantee the receivables for Facebook. So Facebook pays them a commission. In exchange, they get their accounts receivable guaranteed, and they get someone on the ground who's constantly marketing their product. So it's a win-win for both sides.
And Chris, when you bought Cisneros, you thought you were paying a multiple, a fairly, reasonable multiple, but then the growth of that business really took off in a much bigger way than you even thought, and brought the multiples down so quickly. Can you just kind of describe that experience and what happened, and we kind of get into a little bit more details about how attractive this acquisition has been for you?
Sure. The biggest gating factor with respect to the Cisneros operation when we acquired them was that if you buy through Cisneros, if you're buying Facebook through Cisneros, the one thing that you're afforded as a client is you're given a line of credit, and that's because Facebook gives Cisneros a line of credit. Usually, if you're not buying through Cisneros, if you've ever bought Facebook ads, you have to pay as you go. You have to put a credit card down, and as the campaign is executed, your credit card gets dinged. And our agency clients are allowed to buy Facebook on credit terms that we dictate. And one of the gating factors for their growth when we acquired them was that their line of credit with Facebook was limited, and they sensed that there was a lot more growth opportunity in their markets if they could get a larger line of credit established with Facebook. Facebook looked at the company, and smallish company out of Miami, didn't really have the balance sheet that warranted an expansion of their line of credit. So what we did when we acquired the entities, we sat down with the Facebook folks, walked them through our balance sheet, and kind of presented to them the fact that we're a New York Stock Exchange company subject to controls and regulations, and Facebook quickly got comfortable with us serving as a backstop for that line of credit. So, and that line of credit has since expanded significantly. And when we got that line of credit expanded, that's really when the growth, took off. And it was long suspected, and then we were all pleased to see it once it actually came to fruition. And it's been an exciting run so far. And what I think we can do is apply that same strategy elsewhere. Around, it's a relatively simple business that can be replicated in other parts of the globe, and that's kind of what we're focused on right now.
Chris, can you review for us, for those online, obviously the spectacular growth that we've seen on the revenue line, and the margins are a little different for Cisneros, but can you just talk a little bit about the experience that you've had in terms of the revenue growth over the course of since you bought the company?
Well, the revenue growth has been running, second quarter we announced our numbers, and the Cisneros numbers alone, Cisneros did approximately $115 million of revenue in second quarter against $42 million of revenue in the second quarter of the prior year. So, and obviously the prior year comps are fairly easy because of the pandemic, but online, prior year, you still had some pretty respectable performances. So, it's been running at roughly 100% on a pro forma basis since we acquired the entity, and we'll be up against tougher comps as of the fourth quarter of this year. But really, that line of credit continues to expand, which is fueling our growth, and that's exciting for us.
And originally, when you purchased this, I think that you were anticipating that this was going to be 7 times cash flow, and it looks like now it's going to be less than 2. And if I'm wrong, correct me. But
sure.
Given the growth that you've seen, am I about right?
So the company was cash flowing approximately on a trailing 12-month basis, approximately $10 million when we acquired them, and we acquired 51% of the entity back in October. That implies approximately a $60 million valuation. $60 million valuation on 10 million. That's 6 times, which felt right, given the geography and the type of business that they were in. So now, without giving guidance to certainly numbers at year end, but we think that 6 multiple is going to be significantly lower as a multiple of 2021 EBITDA. And a home run. Again, we didn't acquire 100% of the entity up front, so we'll still pay on the back end for that value that's been created. But yeah, it's definitely been a fun run.
And then in terms of the increase in the credit line, you indicated that, initially started at 50 million, and I know that it increased to 100, which has driven a lot of the growth of revenues that we've seen, the spectacular growth that you've seen so far. It sounds like you've increased the credit facility beyond the 100 million. Where is it set now?
You know what? I don't want to give specifics, but it's well north of 100 million as it stands, and as the company continues to grow, Facebook gets more and more comfortable with that line of credit. So that will no longer be a gating factor as far as our expansion opportunities are concerned. So I'm pleased to see.
Yep. So we talked a little bit about Facebook, and that's just one social media company that's represented by Cisneros, and obviously it's the biggest market opportunity right now for you, but you have other opportunities, and I was wondering if you can just kind of gauge for us the market opportunity in Latin America for Cisneros, and whether or not other social media companies like Spotify or even TikTok or others might have provide you a nice growth opportunity as well.
Sure. I mean, the fun aspect about this business is, yes, we are, the bulk of our performance is off of the Facebook platform, but You've got other platforms that we're also marketing for. You've got Spotify, you've got LinkedIn. Spotify is a relatively new, new partnership of ours. You've got potential new partnerships. We acquired recently, and I think I'm jumping the gun on your questions here, but a company called Media Donuts in the Asian Pacific Rim. And Media Donuts is the same type of business. It's a sales rep firm. It represents the likes of Twitter and TikTok and Grab and Biddable Solutions, but they don't have a Facebook relationship. And the folks at Cisneros don't have a TikTok relationship. So you can see where we're going here. The drive is to create a global marketing firm and establish relationships that are perhaps are not being included in certain parts of the globe. Transferring or expanding those relationships to other regions, and that's exciting for us. And there will be other opportunities as well, not just in Latin America and in Asia. And that's something that we're focused on.
And are there any specific regions in Latin America that maybe Cisneros is underrepresented at this point that might offer you an opportunity to open up, or do you see the opportunity for them to become a little bit more aggressive, maybe even in the United States?
There are clearly areas that we're trying to beef up our partnership relationships throughout Latin America, and that's something that we're working on. And yeah, you can also take this model and apply it to our expertise here in marketing to U.S. Hispanics here in the United States is certainly a niche that we've only begun to explore, and so stay tuned on that. But the irony is, by being a Univision affiliate for the past 30 years and also being in Spanish language radio, we have that level of expertise, and now we've stumbled onto and developed an expertise marketing to consumers on the digital platforms, and there's no reason we can't combine our Latino expertise, marketing expertise here in the United States, with the digital expertise that we've established now globally. So stay tuned on that front.
You mentioned Media Donuts, and so let's kind of shift our attention to them a little bit. Obviously you've identified a really attractive niche with Cisneros, and your recent acquisition of Media Donuts is a similar business, but it's based in Southeast Asia. So you're kind of moving outside of that demographic of the Latinos that you were, so notable for, and moving now into the Asian markets. Can you talk a little bit about the market opportunity that Media Donuts has? And you mentioned a little bit about the prospect of cross, pollinating, I guess, the business opportunity. But what is also what are the similarities with Cisneros, and it maybe kind of give us a gauge of what the market opportunity might be there?
Well, Media Donuts is a Singapore-based firm. It's a digital sales rep firm, just like Cisneros. Their primary partnerships, like I said earlier, are Twitter, TikTok, Spotify, and Biddable Solutions. They don't have a Facebook relationship, but more importantly, they're focused, they're operating in markets that are much less mature on the digital landscape than here in the United States. They're in the Philippines, they're in Thailand, they're in Vietnam, India, Indonesia, and Malaysia. These are markets that are only beginning to, hit their stride as far as, digital consumption is concerned. And so, we think that the immature nature of these markets is a dynamic growth prospect for us, and to be able to be marketing these global digital platforms in this part of the world is, we think it's a great growth opportunity. And it's an earlier stage operation, I'd say, than Cisneros. It's not nearly the revenue scope that Cisneros is, but that's growth potential as far as we're concerned. And so that's, it's an exciting deal that we did. We closed it on July 1st. So we'll see the first print of that in the third quarter numbers that we'll report in early November. And like I said, it's in an exciting part of the globe as far as digital marketing is concerned. And it's serving global digital platforms that are high growth platforms as well. And so that combination, we think, makes for a great growth story.
And does Media Donuts report to you, or is it being headed by the team in Spain?
No, so Media Donuts basically reports to Juan Saldivar.
Okay.
The CEO of Media Donuts reports to Juan, and Cisneros, the folks at Cisneros, Victor over at Cisneros, reports to Juan as well. So they're not being managed. Remember, for Cisneros, we still only own 51% of the entity, and so they both are being overseen by Juan Saldivar here in Los Angeles.
Well, Chris, it seems like you've identified a really interesting niche in this in the digital media space, and I was just wondering, outside of Asia and outside of Latin America, are there other acquisition opportunities in the space? And maybe you could talk a little bit about what the multiples have been in terms of acquiring these businesses. And it just seems like you caught a great opportunity here. What markets also might you want to focus on next from here?
Well, look, this is an industry that really is predicated on, the large global digital platforms doing the math and figuring that it's easier to hire third-party companies to do their marketing in what I'll call hard-to-reach countries around the globe. So there are other continents that have opportunities. I don't know if I'll get into specifics, but we think there are plenty of opportunities, just like the two that we've uncovered here, that could be ripe for consolidation. This is an industry that reminds me, and this is an industry that's only been in existence for less than 10 years, and it reminds me a lot of the broadcast industry back in the 80s and 90s, where you had this wave of consolidation that created an exciting value proposition, and it kind of feels like that here with this industry. There are several other players in this industry that are consolidators, and so we're all out there kind of working against each other, I guess. And the multiples you're starting to see creep, whereas the multiple that we acquired Cisneros was approximately 6 times. You're starting to see that move into the high single digits and even north of 10 times. So you got to pick your battles strategically, and that's what we're trying to do. Be very, very prudent about it. But like I said, I think we're in the early days of what could be a consolidation event for the industry.
And just kind of going back to the Media Donuts opportunity with Facebook, you mentioned that the prospect that now you have this great experience with Cisneros and Facebook in Latin America, and your Media Donuts doesn't really have a relationship with Facebook, but that might be an opportunity for you. What would be the gating factors at Facebook at this point? With Cisneros, obviously developing more business for them was an increase in the credit line, but with Media Donuts, it might be that they might want to look at the market itself. What would be the issues that might either bring Facebook to you with Media Donuts, or might be a gating factor?
Well, they're in a lot of those countries where Media Donuts operates, there's still a dearth of presence by the global platforms. So we think there are plenty of opportunities, not just in the markets that they currently operate in, but in additional tangential markets throughout the region. And so, they're going to grow organically with the platforms they have. They're also going to grow by hopefully acquiring and developing new partnerships. And then they're going to grow. Their intent is to grow geographically within the region. As far as gating factors are concerned, look, we're going to. They're being onboarded onto our centralized process, our accounting process, our system of checks and controls. We'll make sure the back office is as lean and efficient as possible. And we're also going to lend our balance sheet and give them the ability to expand financial relationships with digital platforms who, before the acquisition, just like Cisneros, perhaps were somewhat reluctant to, expand the financial aspect of that relationship because, quite frankly, they didn't have the balance sheet to support it. So we're going to give them the resources of being part of a much larger operation, but we're going to let them operate in their regions, somewhat autonomously. So because they're aggressive by nature, Peter, their CEO he's a great leader, and he's very ambitious. And sometimes with professionals like that, you want to give them the resources they need to succeed, and then just get out of their way. And I think that's kind of how we're looking at the growth aspects of that operation.
And this business operates on fairly low margins. You know, the margins, I think in the last quarter were roughly 7% in total for
That's
your
right.
digital businesses. And so, what are the opportunities for margin expansion? And typically, you know, the media rep firms like that don't operate on large margin, but there has been some margin improvement over time in some of them. What are the opportunities for margins here for this segment?
Yeah. So to your point, the digital business is a 7% margin business as of the second quarter. We think there's growth opportunity in those margins, and that's going to be a function of scaling the revenue opportunities. And as revenue expands and scales, you'll see the digital margins expand as well. I'm hesitant to give you a number on that front, but we definitely think that there's opportunity there.
Gotcha. And I want to turn next to some of your traditional media companies. Let's first start with radio. It's one of your smallest businesses, so let's start there. It had substantial growth in the last quarter, much better than I would have expected. But and so was wondering if you can just kind of frame for us. And it seemed like a lot of that was coming out of your network or national business. And was
That's
wondering
right.
if you can talk a little bit about the growth, how sustainable that type of growth might be as we go into 2022.
Sure. Well, radio, let's be clear, radio had some easy comps. Second quarter of last year was the nadir, right, of the economy, and no one was commuting and no one therefore was listening to radios in their cars. All of that has dramatically changed this year. But clearly, we took last year as an opportunity to do a couple things. First of all, we went through our expense structure and radically changed it, particularly in radio. And you saw cash flow margins in radio now exceed 30%, which we haven't done in 11 years, which was really, we were pleased to see that. So we've made a bunch of expense cuts, the majority of which are remain in place to this day. We've also made some management changes. So Chris Munoz, who heads up that operation, he's organized the platform much more efficiently. He's positioned our product in front of much more reliable list of clients. And he's just basically executing better than we have in years with that unit. So it's really a question of execution. We did what we needed to do on the expense front, but really, and Chris comes to us from Univision, where he had a successful stint. And now we've brought him on board here to manage that network sales process. And he's just really done a spectacular job.
Chris, you know, the trades have come up with I guess, picked up on one of these stories here, and that you switched one of your stations to an English language CHR format. And I was wondering if we, and they're all, I guess, up in arms, wondering whether or not you're giving up on the Spanish formats. And so why don't you set the record straight on?
We are not giving up on the Spanish language format. Look, we're not 100% Spanish across the marketplace here. So there are pockets, there are markets out there where you just have a saturation or oversaturation of Hispanic media. Sacramento was one of those markets, and after looking at the landscape of competition, we already have a significant Spanish language radio presence in that market. We felt that the one niche that was underserved in that market was country. And so, we bit the bullet and switched over to a country format. We'll do English where English is warranted. We do, after all, have an NBC station in Palm Springs. We've got 3 Fox stations across the country. They're all married up with and integrated with our Spanish language operations in those existing markets. In Miami, we have a radio station that's a Haitian format, right? So, we look to serve our clients in the most efficiently and effectively as possible, and we'll make those decisions on a one-off basis. But certainly, we're not. It's not a radical change that implies bigger things. We're not going to become a country radio network anytime soon. That was just a one-off decision that we thought was the most prudent.
So you have a favorable runway for radio, especially going into the elections next year. I know it's a relatively small number, given that radio is your smallest division, but any thoughts about the political uplift in 2022?
Oh, 2022 will be exciting. It's still too early to put any numbers on it, but look, midterm elections, we've been cycling through more or less 30% growth for midterms every 4 years, and yeah, it's going to be an exciting year for political. It won't be as exciting as the last presidential cycle was, but certainly we're going to see a significant amount of political hitting. I think most media will, and we think we're positioned perfectly to be able to deliver political messages to our Hispanic constituents. So it's going to be a fun year as far as politics are concerned.
Well, your television stations, generally TV, when you look at TV, that number one and number ranked two stations in the market do get the lion's share of political. And I was wondering if you could just talk a little bit about your ratings in your performance in the course of the last year, and maybe just kind of give us your thoughts about the stability of those ratings as you head into a political year on the television side.
Sure, Univision's been doing a great job with their novellas. They've been steadily improving, and the one thing that we're really excited about is, that this merger of Televisa with Univision, where Univision now will effectively control the studio content emanating from Televisa. That's exciting to us, because basically they will now have a hand in catering the content for a U.S. consumer, whereas Televisa historically has developed its content more specifically for a Mexican consumer. This gets Univision the opportunity to really sharpen the overall content in an effort to ramp up ratings, and I think that's exactly what's going to happen. And the merger hasn't happened yet. It's still kind of in the regulatory process, but when it does, we think that that's an exciting story that we're going to see unfold. So, but just over the past, I'll say 18 months, you've seen a steady improvement in ratings, which has been, wind in our sails, and we expect that to continue. It's a good story.
And it's interesting that a lot of the other English language media groups have been indicating that they feel that political advertising is actually going to be greater than 2020, given the amount of fundraising and the amount of activity that they're seeing, the close races that they're likely to see. And you're specific in certain markets. So California, for instance, may not get as much political from that standpoint, but can you just kind of give us your thoughts in terms of your television and the political outlook as you go into 2022?
Well, I mean, the exciting markets, as far as we're concerned for 2022, really, you're talking about Colorado, you're talking about California, you're talking about New Mexico, and perhaps the biggest market of all for us opportunistically is probably Texas. And those markets are going to have some tight races. Texas is trying to figure out what color it's going to be over the next 4 to 6 years, and a lot of money is going to be spent in that kind of soul searching process as far as advertising is concerned. So that's one market that we're really excited about.
Gotcha. And so before we kind of go through some of the other balance sheet questions and things like that, Chris, I was wondering if maybe you can just update everyone with the guidance that you provided for the upcoming quarter, which I think was quite remarkable. So if you want to just talk a little bit about that.
Sure. We talked about last week on our earnings call. TV revenue was pacing at a -4. If you take out political last year, that translates to a +13. So it's still a healthy performance for that platform. Radio is pacing at a +25, and it feels like radio every day continues to improve upon that. So that hopefully will translate to an even stronger number. And then digital, of course, again, without the comps being in prior year, digital was pacing at a plus, I think it was 948%. So just phenomenal numbers all in. The company's pacing revenue-wise at about plus 219%. All good news, and it's all about executing, and that's what we're focused on. And stay tuned for updates on that front.
That's terrific. And Chris, obviously your balance sheet benefited from some of the spectrum sales a while back. And
Yes.
And so I was wondering maybe if you can just talk a little bit about your balance sheet at this point and for the folks that are on the line.
Sure, we have a cash balance north of 180 million, and we have a total debt of approximately 213 million. We're paying about 2.9% on that debt since the interest rates are so low. We're basically, borrowing at LIBOR plus 2.75%. That LIBOR right now on a 1 month basis is less than 10 basis points, which is just, I've never seen it this low since 2008, 2009. So yeah, those are the balance sheet dynamics, and that low interest rate allows us to have a high conversion rate as far as converting that EBITDA generation into free cash flow. So it should be all bodes well. The balance sheet is pretty pristine. The revenue, all of our platforms are executing well as far as revenue growth is concerned, keeping cost controls in place from the pandemic last year. All we think bodes well for a really successful 2021.
It's interesting, and now these are going to be my thoughts and not yours, but my thoughts have always been that the company is sitting on just a great deal amount of spectrum. And at one point, we thought that you were going to get, $1 billion in terms of some of the spectrum. But of course, that the sale process was kind of a weird process, and you did the right thing in terms of keeping more of the spectrum. But at some point, given the growth in the and the need for spectrum, there's that opportunity farther down the road that you might have the opportunity to sell more spectrum. What's interesting in my view is that you look at this business, it's almost like you get a little bit of a card out there that might give you the protection of the downside with the prospect of additional spectrum sales in the future. What are your thoughts about the prospect of additional spectrum sales?
I don't disagree with that. Now, I'll remind you, or maybe inform you, that after round one, remember that the auction didn't happen until the third round, which was a bit of a disappointment because the demand wasn't there as it has been for other subsequent auctions. But after round one, we were sitting on a check north of $1 billion. So had that happened, shoulda, coulda, woulda, right? But I don't disagree with you. I think there's going to be another auction at some point. It's tough to pin down when that is, but I've heard rumblings. But we still left a lot of value on the table after that last auction, particularly in the Northeast corridor, where we still have some very, very interesting stations in great potential, data markets. So I don't disagree with that prospect that if and when there is another auction to come down, will be a meaningful player in that.
So, Chris, your debt leverage is obviously pretty low. You're well below that of the industry. You have cash, a lot of cash. Can you talk a little bit about where how you're going to allocate capital, acquisitions versus return of capital to shareholders? Can you talk a little bit about that?
Sure. So we reduced our dividend back last year during the pandemic. We basically cut it from a 20-cent dividend to a 10-cent dividend on an annualized basis. The board has been looking at that dividend policy quarter in, quarter out. They'll continue to do so and balance that dividend, any prospects for dividend increase, with the potential uses of capital going forward, namely acquisition opportunities that we currently see in front of us. So there's also a stock buyback program that remains on hold. Again, another line item that continues to be revisited quarter in, quarter out. So I guess the theme here is stay tuned, as a broadcaster would say, and we'll see how that evolves.
Thank you for joining us for this virtual roadshow presentation brought to you by ChannelChek. View our YouTube channel for more video content, including C-suite interviews, virtual roadshows, and conference presentation replays. New content is added regularly, so subscribe below to stay up to date. Visit channelchek.com or click the link in the description to access equity research, news, and advanced market data on this and 6,000 other small and micro-cap companies.